Hello, traders. It's 8:04 a.m. Chicago time on the last day of September 30th, 2020. It's a Wednesday today. This is episode number 1848. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market stance is risk off, pretty solid. Risk off across the board. However, the magnitude of the selling is not really all that great. We did take a pretty strong dip down into the next key area in the ES before bouncing back up to almost back to the close here. We're down 4 points in the S&P. The laggard today is crude below $40 in the November contract, down 24 cents or 0.61%. The Nasdaq's off 27 points or 0.25%. The leader today is the U.S. dollar, up 14.5 cents, trading at 94.07 even. The bonds, the Bund, the notes are all down as well. The market's moving into, again, risk off, although it's interesting that it's pretty much risk off across the board. Again, it's not by much, and that's where we stand this morning. In terms of economic releases overnight, there was quite a bit out of Europe. We got several numbers out of Germany. Great Britain releases GDP growth. Q-on-Q final came in at negative 19.8% versus negative 20.4, slightly better, and negative 21.5 versus negative 21.7 expected. The U.S. released its ADP employment change at 8:15 Eastern today. Was stronger, 749,000 versus 610,000. Growth rate, Q-on-Q final for Q2 in the U.S. was worse than Great Britain, but better than forecast. The forecast was negative 33%. Negative 33% came in at negative 31.4%. So what's in front of us? Chicago PMI is scheduled for 9:45 Eastern, 15 minutes after the open. It actually comes out at about 9:42 a.m. to subscribers, expecting 50.8. 50.8 is the forecast. At 10 a.m., we get pending home sales, and then we get the crude oil inventories at 10:30. Fed's Kashkari at 11, and Fed's Kaplan at 6 p.m. That pretty much leads us into the review segment today. I got a lot of feedback from yesterday's Trader Bite. If you haven't seen it, you might want to just take a peek. I walked through the auction. Yesterday and how it proceeds, and I explained the market's general rotational habits, and again, if you're a Convergent member, during our trade talk yesterday, we walked through that and talked about how it's very likely to push back over 33.35 in the S&P before the close yesterday, which it did. Doesn't always work out that way, but I'm finding that the auction itself is very, very orderly. These are the expectations of yesterday, expecting deep chop, a lot of chop. Explained yesterday why that is. We're opening on top of the prior VPOC, the overnight point of control, and a composite. The composite high volume node, so expected a lot of chop. Was looking for a break higher and a run. And the reason being, I looked at this as a gap and go situation from from the prior day, from Monday. I was looking for a continuation of that buying. Did not work. Instead, the second scenario was to push to about 33.50 and then move down, break lower. And if in a break lower, consolidate at the high volume node here at 40, and then continue lower, and was looking for 33.18, 33.17. If you recall, this is what this line is: 33.17.18. This is the composite low volume node. Once it gets down there, expecting it right back into the range, was looking for about 33, 36, 37 on the close. This is what I was looking for yesterday. Again, a push to around 50, a drop to about 17, 18, and a pushback to about 38, 37, 38, back to this composite high volume node. You may recall that we went through this and I explained the reasons that we would be looking for this. So let's see what actually happened. So that was pre-market. Here's what actually happened. We had a pretty choppy open. Let me switch to a 4-tick Renko, a little more detail. There's the 4-tick Renko. Don't get confused by all these lines. Each one means something. It's okay. Okay, so what was I looking for here? Open auction pushes to 48 and a quarter. Was looking for the 50, if you recall. 50.75 was the prior high. Then I was looking for an impulse down. So I'll show you that. There's your impulse down right there from the high. The long leg is the impulse. There it is in real life. Pushes down to value low right there, and then could not turn back up. The IB was in. We have range extension below the IB at this point, and then we continue lower, and then we finally make it down to where? 1650. Remember, we're looking for 1718, right? Why am I writing numbers backwards? Who knows? So I was looking for 50 to the upside, around 50 for resistance, was looking for 17 for support, and come right back in to the 38 area, which is right here. So right on cue yesterday. Again, it doesn't always happen that way. The delta yesterday was moving with price. The market was conforming, and no surprises yesterday. The big thing to note from yesterday, though, is the point of control has shifted down. So we moved our point of control down. So now we're expecting, remember that example that I made yesterday? I think it was beer. I used beer. That move down was with the point of control prices being accepted lower versus acceptance up here. Take a note of that. Lower high, lower low. This is potentially with the lower high. This is the beginning of one-time framing down and further discovery to the downside. If then we carry this, what's up with this here? It's interesting, when I'm broadcasting, it just brings this computer to a crawl. Remember yesterday when a bunch of people left and it came back, the control came back, and was able to continue the trader bite and work it through, but let's see if we get that lucky today. There we go. Man, it is really choking. Okay. Here's what we've got for the overnight session. The overnight session has really strong volume, Tested above in what looks like an excess. It tested above yesterday's range, held the 52, poked through the 52. This was right before the debate began, and then this was a continuation during the debate, and then from there, a parabolic impulse down, push, continuation, pullback, and then a higher low for the correction, and then we have a very classic, right? Very classic pattern. Impulse down, pullback, continue, a beginning of a correction, higher low, right? Higher low, and then reverse. This is what we have yesterday. This is what we had yesterday. Pretty orderly. Look at where it went overnight. Now remember, yesterday we held this composite low volume node. I mean, you witnessed that, right? Oops, that's not straight. Composite low volume node here. We spent a lot of time on top of the high volume node above at 40, and the next key area to test down was right here at 07. Then that pushes us into the century figure at 3,300 right here. And then the next big area to test is 92. 92, look at the low, 91 and a quarter. So what we've done is we've migrated across the high volume node all the way to the next high volume node, next key test area. Below that, the next key test area brings us back down here to 3250. That's the next big test area, and we are holding steady. We held steady this high volume node, and we are back above the low volume node. So we've migrated from high volume node to low volume node, right? Low volume node to high volume node, and then back low volume node. You could see there's a reaction right here, a little bull flag, and then we're coming back to the high volume node. And so this is where this stands. This looks back 200 days. This chart looks back 200 days. The date starts on the 25th, on Christmas Day of last year, 2019. It's a 200-day average, a 200-day look back, but really the composite needs to be pinned down. I haven't done that just yet. So what do we have overnight? Again, strong volume, multi-distribution, a market that is in full price discovery, right? Just moving. It's a kind of an odd-looking trend. And we are back inside of yesterday's point of control with a lower high, lower low on the RTH session, with value moving lower, and now the overnight session testing below. So the skew now is to the downside. The next big area to test is the point of control from the point of control from last Friday, was it? Yeah, Friday, down here at 88, and a likely test through this this profile. Once we get into this profile, it's a price discovery profile. We're likely to push all the way down into this stock zone at 59. That becomes, as soon as we get into this range, I would expect a continued and persistent test all the way to 59, and that brings us into the next high volume node at 52, right? So that's where we stand this morning. There's a lot, I know there's a lot to digest here. The interesting thing is, again, Delta participating on both sides, where Delta is in line. It is positive currently, and the market opened and is positive in price right now. We're just above the open with the Delta just above the open. So pretty consistent participation. The tape is actually pretty thick for this time of day, although in 10 minutes we open. So what are we expecting for today? I'm not going to show a book map. I didn't, let me see. There's just not much to glean there. Let me turn that off, in fact, to free up some bandwidth. Save and exit. Okay, so what are we expecting for today? Overnight point of control and yesterday's point of control on top of each other. There's some semblance of balance here. Oh, this is not the right color. There's some semblance of balance here. The expectations for an open auction that continues the push higher. We're swinging higher highs, higher lows. Continues the push higher. Looking for it to squeeze into this 3340 area, push into the 44, looking for 44 here, 44, and I'm looking for an impulse down back and then a retest of the 18. This is the 18, 1718 area, 1718, and then to start to move with the primary with the primary trend that was established over the last 2 days, which is a lower high and a potential test lower. Test of the overnight session, the test of the overnight down here So this line should have gone down a little bit more, and then a pop higher. Sorry, this isn't so clean, but I'm not going to redraw it. I need to move on. Secondary, open auction that drops back into the 33.18 area. 33.18 area gets an impulse higher. We find buyers here again, consolidate and hold steady, come back into the 40, and then start to squeeze up. This is a lesser likely scenario, but if we find that we have moved the point of control lower, and remember there's a gap zone down here. If we find that we're rejecting the gap zone again, it's likely to push through this intermediate high at 52, which it attempted to yesterday and could not get done. We are opening in range in value, Just make sure you understand that that's a market that's in equilibrium. I'm going to leave you there. Good luck, and I'll catch you tomorrow morning. Take care.